Hey, everybody, what's going on? This is your host, Chris Flowers. But here's the deal. Getting ready to interview Cary, CPA friend of mine. We're going to go back and forth a little bit about different things as far as the aspects of CPA and working with business owners and bankers and trying to get everything on the same page that we always seem to be in a constant struggle to do. But let's see if we can get it from the accounting side expert and see what we can do to get this party started. So I'm going to give Adam a call here right now. All right.
Hey, Chris.
Hey, Adam, how you doing, buddy?
I'm well. How are you?
I'm doing well. We are on the air, so just just to give you a heads up, we're recording live here. So, how's it going, man?
All good. Going well.
Yeah, you survived another tax season.
Survived. Yeah, pretty much. It was pretty tough. It was a pretty tough year, but got through it. Got a lot more to do, and yep, just keep on kicking.
How are those extensions coming along?
Not as quick as I want to ever, but we get some out, or we get enough out each week, and it's just keep on plugging, just keep on swimming.
Yeah, that's awesome. Like I said, that's why we rely on you, man. Like I said, it's you're the guy that keeps us all keeps the IRS off our ass. So
that's what we do. Yeah, we do our best. Yeah,
absolutely. So for the listeners out there, why don't you go ahead and tell everybody who you are, your company, and things like that, and tell them what you do, and then we can get into it, brother.
All right. So Cary, and been I'm an Arizona native. Been in public accounting since 1997. Graduated Grand Canyon University 1,000 years ago, and worked in small firms. Became a partner with a partner in a very large firm. Left the large firm. Started my own firm in late 2016. And then we've been growing ever since. And then bought another firm here just last year. And so the name of our firm now is Cary, and we're out here in Peoria, northwest part of Phoenix. And we've got about 9 full-time people. I think 5 CPAs on staff, and just a bunch of tax work. A lot of tax. So that's kind of our wheelhouse. So yeah, that's us.
For everybody that's familiar with the area, they're close to Arrowhead, Harley. So they're right down the road from Arrowhead, Harley. So all you veterans that are out there probably been to Arrowhead, Harley a bunch of times, like me. Just literally your CPA is like right down the street. So
yeah. About I literally could probably throw a rock and hit the parking lot.
Absolutely. So I gotta ask you a question, a little bit off topic, but it might be of some interest to our veteran listeners out there. How many Ironman competitions have you been in?
So I've done 2 full Ironmans, and then I've done 2 half irons, or half iron distances, I guess, but 2 fulls, two fulls.
Awesome. See, yeah. So not only can he crunch numbers, but he can get it done on the road too. So like I said, not your typical accountant, not little doughboy guy, behind the desk over there. A guy can get it done. So
yeah, very slowly, but I can get there.
Hey, you know what? But you get there. I can't get there. I can tell you that right now. I can swim. I can do the swim part, but other than that, the running part is over for me. Like my knees are just way gone for that.
Yeah.
So other than money, of course, because we all like to get paid. We don't know how to do volunteer service here. What is it about the CPA business that just keeps you going? Like what is it about? Because like I said, I know, being in business lending, just looking at the tax returns, man, it's a grind for me. And like you got to prepare all them bad boys. So what is it that keeps you motivated? You've been in this, doing this a long time. So what is it that keeps you going?
Yeah. So, my biggest thing with tax, so a couple of things. I like the idea of figuring out ways to keep as many dollars as we can and not having to give the government any more than we have to.
Of course.
And so a large part of a large part of our job obviously is to do tax returns, and it's just part of the thing.
Mm-hmm.
I'm not in love with doing tax returns per se, but the idea behind, okay, well, if we do, depending, and everybody has their own situation, and so I love the challenge of taking somebody's situation and asking the questions and seeing what they're thinking, what's the plan, what's the 5-year plan, 10-year plan, whatever, or are we close to retirement? What are we doing? How much do we give to charity? Just all kinds of different factors that everybody has in their own thing. How many kids do we have? Our parents well, our parents alive, our parents sick, all this, just 1,000 things that everybody has their own situation. Mm-hmm. And taking that and kind of almost crafting an individual plan for each or as many clients as we possibly can. Sometimes there's nothing that we can do. Mm-hmm. Somebody has a W-2 and that's it, and so there's not much that we can do, right? I mean, there's just not a whole lot of options. Right. But other people have a lot of different things that we can incorporate. So, trying to come up with ways to save money, mm-hmm. and then what that does though is, even if it's we save $10,000 a year for the next 10 years, that $100,000 is now something that they have the ability to do whatever they want. Maybe save it. Maybe that becomes something that that they can pass on to their kids, and so now that's become a legacy type of a thing. Mm-hmm. And if we can play a small part in doing that, then that's great. I mean, it's fun to kind of figure out just how we can keep as much of our money as we possibly can. So that's pretty much it. That's the main thing that keeps me going on that grind.
Yeah, no, that's great. Like I said, and we definitely all appreciate it. And just like I said, full disclosure, Adam's been my accountant before. We used to go to church together. We're both Broncos fans in the AFC, so we've known each other a long time. And just so as I but that's why I wanted to have you on the show, because I know how passionate you are. I know how well you do your work because I've been there, and I want all my listeners to know what a valuable asset it is to have not only a CPA but the right CPA, because I think that's really a part of it. I don't know, I mean, anybody who's heard me speak at any business lending engagement, I've done hundreds of them, or anybody that's ever heard me, or been a client of mine or a prospect of mine, I've always had this philosophy. Okay, so it's the business owner's vision that they have to get it out there, okay, kind of like Steve Jobs did with Apple. But they need to have a board of directors, okay? They need to have an outside board of directors. That's their business banker, that's their CPA, and that's their attorney. Obviously, the business banker handles everything from the financial side, what it's going to take to make it happen. The CPA is essential for, like you said, limiting the tax liabilities and, keeping the IRS off your ass. And then, of course, the attorney keeps everybody out of jail. So that's great. So, but there's always this balance. There's always this thing, this counteraction of, okay, I mean, like I said, 100%, if you are a business owner or aspiring to be a business owner, if you don't have a CPA, you are wrong. Dead ass wrong. Okay? Get a CPA. I don't care how small your business is. I don't care if you're running it from your kitchen table. Makes no difference. I mean, look where I'm running this podcast from. Okay? From my house. Okay, it does not matter. Get a CPA today, okay? Like yesterday. So, but that being said, and I put this on the business owners have to get the banker, the CPA, and the attorney all on the same page. They have to, it's their responsibility to say, hey, here's where I am. In 2 years, I want to be here. I want to buy a building. In 5 years, I want to retire at X. Go. So it's up to the banker, and there's always this counteraction between the bankers and the CPAs. Of course, the CPAs are trying to write off everything, of course, so you don't have to pay the man. But then when it comes to lending time, they're DOA because they're not showing enough debt service. So there's always this balance. And they come in and say, hey, I want to buy this building or I want to buy this equipment. you can't debt service it. So I always say, like I said, it's either pay me now or pay me later. Especially in the end game, people think they have this philosophy of, oh, I'm going to write everything off, but I'm still going to get that pot of gold at the end. I'm going to sell my business for X, and I'm going to walk away with a pot of gold. And that's, I mean, tell me if I'm wrong, but from my experience, that doesn't happen, because if you take all your write-offs out, it's either pay me now or pay me later. If you want the pay me later, the big pot of gold at the end, you got to start showing some retained earnings now, so that way you can get that big pot of gold at the end. Do you agree with this philosophy? I mean, I've been doing this 25 years myself, so I mean, I know of what I speak, but from an accounting standpoint, talk to me from that side.
So yeah, so yes, I agree with how with what you're saying. I would add probably that a solid insurance plan is probably
Absolutely.
wise as well.
Of course.
I don't know how much that kind of a thing, but and maybe a second is an investment advisor as
Of
well.
course.
But that kind of goes back to the whole retirement thing. So.
Those are different. Those are different interviews I'm going to do from different shows.
Sure.
But you, the accountant, go.
But all of those, each one of those players have their own role, right?
Huge,
so,
absolutely.
So that's that part. But then we have lots of clients that like to write off as much as they possibly can, and then they come to me later and say, hey, so I'm trying to get this loan for a house or to buy a building or whatever it is. Usually it's a house. Mm-hmm. And they're like, well, the lender is looking at my income and I don't have enough income. And so what can we do? And I said, well, I mean, at this point, not much of anything really. I mean, if it's already been filed. So, it looks really weird to take expenses off. That would kind of be a red flag. So, so then on the, going forward, they're like, well, I need to show income. So, I'm willing to pay this tax. And then it's, well, this is how much the tax is going to be. Mm-hmm. And that can be quite a surprise. So that's on that part when you're looking to show that you have the debt service. From the sale of the business part, you're absolutely correct that you have to have something on your balance sheets that shows that the company is worth anything. I mean, exactly. no buyer that I'm aware of would look at a company that is either losing money or just breaking even or just kind of middling along and offer much for it. It's just not going to happen.
Right.
Worst case, or maybe not worst case, but one of the cases would be, if you tell the buyer, no, look, it actually makes more, I just don't report it all, that doesn't really come across well from an ethics standpoint.
Right,
so
exactly.
You probably wouldn't want to go that way either. So,
I've had guys drive up in like Maseratis, and hey, and they're showing they're making nothing, but they got a nice brand new Maserati sitting in the parking lot. Right. But I didn't make anything last year. Okay, right. Cool, yeah. Right, we're good. Yeah, sure. No, and that's always been the thing. Like I said, it's like I said, if you want to dance, you got to pay the band. If you want to owe, you got to pay the man. So if you want to get a loan from me, you got to show that you can pay it. And then I've had it, from a business acquisition standpoint, which I've done a bunch of those, obviously, we're always going to get an outside appraiser to appraise the business. So, like I said, it's a third party, got arm's length. This is not my opinion. This is what it's worth. They're going to go through the tax return. They're going to look at that balance sheet and they're going to say, you have no assets. You have this company. They're going to think, oh, my company's worth blah, blah, blah. Like, no, it's not. It might be worth that to you, but to someone else from the outside buying it, looking in, they're going to see the tax return and be like, yeah, your balance sheet sucks. So no, I'm not buying it for that. So I'm buying it for, it's like you said, it's just like buying a car. They may say, oh yeah, I want, $50,000 for, this BMW, but it's used. Well, no, the blue book value is 35, so I'm paying 35 whether you like it or not. So, and it is what it is. So I mean, like I said, that's not my opinion. That's just the way it rolls. So these are the things that we like to do here on the show. We like to educate people that are aspiring to be business owners or that are business owners that really want to take it to the next level. That's why I have experts on like you to cover all those different aspects of it, because these are the things like I said, just from all the years I've been doing business banking, they don't have these conversations with their accounts. They don't, again, and of course they don't know, because I mean that's not, taxes is not their job, lending is not their job. Their job is
Right.
doing whatever it is, and they're experts at that. And there's no way you and I could do what these guys do, but they need to incorporate people like yourself, myself, their attorneys, like you said, their financial advisors and insurance agents, so that way we make sure everybody's all on the same page. But it's their dream. It's their focus. I've had a bunch of people say, well, my CPA said this. My CPA, okay, great. Then have your CPA cut you the check, because I'm not going to. Okay. So, or vice versa. There's always got to be that balance. But at the end of the day, you and I both work for the business owner. So it's their dream. It's like, hey, this is where I want to be in 5 years. Make it work. Here's what I got. What do we got to do? Let's get a strategy. And then we incorporate, okay, you say, hey, to do that, we're going to have to do this. And I say, okay, if you're going to do that, you have to do this. And then it's up to the business owner, of course, to say, okay, let's do that. Yes, I will write a check to the IRS, as much as I want to grit my teeth doing it, as much as I hate it. But I mean, it is what it is. I mean, like I said, correct me if I'm wrong, but if you want to get any lending done, you want to start progressing, you want to start, getting that building, you want to start getting that line of credit. And these are the things that just need to be done. So, why don't you, again, being from the CPA side, what's like one thing that business owners have either like a misconception of, on the taxes, that they either fail to report, or maybe they should report because it might benefit them? Is there anything in there that maybe you can give some tips and some tools on, maybe things that people aren't, like you said, hey, you know what, I didn't even think about that, like, oh wow, that's cool. What is it from your side of the fence that you see that maybe business owners either try to do too much of or not enough of?
So I think there's a I guess it depends on the overall situation. Like there's a lot of folks that think that there was a couple that I sat with yesterday, a retired couple, and they had the conception or misconception that they are having all their money taken as tax, and so they paid around 15%, and to them that was all, and that's obviously not the case, but that was a misconception that they had. That's a retiree couple, whatever. That's their situation. Mm-hmm. A lot of folks that are more our age, when they're starting a business, or they have a business, and probably when they're starting a business, kind of think that they're going to be able to have these massive write-offs mm-hmm. for using their house.
Right.
And that's just not the case typically. So. The home office deduction it's a valid deduction. It's it can also be abused. It can get you in trouble, but for the most part, you're not going to seriously move the needle on your home office.
So are you saying that I can't write off my entire mortgage payment? Really?
So not your mortgage payment. No, not your.
I've heard it. I've heard it, and I'm sure you have too.
From my brother-in-law or whatever, right? So, yeah, the home office, it's a valid thing, but you're looking at the percentage of your house that's used as your office, or maybe you have a small inventory in the garage or something like that. Whatever that percentage is, that's what you're going to be able to write off on your interest, your homeowner's insurance, your real estate tax, your HOA, your utilities, your internet, all this kind of thing. Which again is a valid deduction, but totally. It's not going to be. It's not going to. I mean, you're going to get $600, $700, maybe $1,000, maybe a little bit more, but typically it's going to be somewhere between $600 and maybe $1,200. Mm-hmm. So yeah, it's something, but it's not going to be something massive. Another thing that I've run into before, and frankly, it's with current service members and vets, is they will have a rental, or they'll convert a primary to a rental property, and they have to rehab it, or they buy this rental, and it's not even just vets, obviously, but it's happened before.
Sure, no. Just anybody. Guys PCS and they keep the house and all that. Yeah, absolutely.
Exactly. On the vet side, and then or on the service member side, or just Joe public. They'll buy a house, they'll rehab it, and they'll put $30,000, $50,000 into it, $10,000, whatever it is, which is real money that they have to spend. And they think there's a conception, a misconception, that we can turn that straight into a tax deduction. And that's not always the case. It kind of depends on what the nature of the rehab was, or how much of it was repair versus how much of it was buying cabinets and buying stuff that's going, maybe a new roof, just stuff that we can't expense in the year that we pay for stuff. So it's a crappy conversation to say, hey, taxpayer, you don't get this deduction. Number one, you have too much income, so we don't get to take that deduction because your income is too high, and it gets to carry forward. And two, yeah, you spent a lot of money, but we have to depreciate that amount over 27 years, and that really sucks. So it's something that we have to do if we want to have the rental property. But that first time through it can be a bit of a shock.
Yeah, absolutely. Yeah, 100%. So let's talk about a little bit about what business owners can do for themselves to make tax prep a little easier on their side, and then also what can they do, which might lead into the next question of what can they do to help you on your side to partner up with you, that way to make your life that much more difficult. I'm sure if they prep better on their side, it's going to help you a lot more on your side. So what are maybe some of the tools, maybe what are some of the practices that you think work best to demystify, like, oh, tax prep sucks and all that? Well, if you handle it prior to all throughout the year, it makes it a lot easier come tax time or whatever. So what kind of tricks of the trade do you got?
Yeah, I think the biggest thing that I would suggest is, especially if we have a business, side hustle, full-time business, whatever it is, I think it makes most sense if you do buy some kind of software, maybe a Quicken or pays the $30 a month and do a QuickBooks Online, something, and really. Spend the $300, $500 a year on the software and get all those transactions in, so that in January of the following year, February, whatever, you're not having to look back at the bank statements and go through and try to categorize each of these transactions that happen during the year. You can do that throughout the year. I think that yes, you'll spend more time during the year, but I think at the end of the year it makes your life a little bit easier. The folks that try to write out the numbers on a yellow pad, I think that they lose some deductions. Frankly, they may not, but my gut says that they're losing some deductions on what they're allowed to take, or frankly maybe they're being too aggressive and they decide to put their personal stuff on there as well. But I think the more that we try to separate personal from business, the more that we try to use a real software to treat this business like a business, I think the better off we're going to be in the long run. That's one part. Another thing that makes life a little simpler is to not wait until March. Frankly, if you want to file by the filing date, or without extension, the sooner you have it to your tax preparer, the better off you're going to be. If you can get it to them in January, then that's probably the best. February and March are incredibly busy months in CPA world, and the work just comes on like a tidal wave. So
but we got some of us got to wait for the W-2s as well at the end there. So we're playing if we're doing a side hustle thing, but we got a W-2 job, so and wait for 1099s.
Yep, exactly. So you're kind of waiting on. You're waiting on that stuff. You may be waiting on 1099s from your brokerage people. You're, so I get that. But the stuff that you can control, if you can have it,
right,
at that time,
as early as humanly possible, absolutely. So that way, get everything prepped before that. So that way, when you get the W-2, bam, it's just send it in and go. Or you get the 1099, send it in and go, because all the rest is already done.
Exactly right. Exactly. Yeah, and just leave it at that. Yep.
I know I'm probably going to get an amen on this one for sure, but for all of you that are looking to start a business, side business, whatever, open up a separate business checking account. Do not use your personal checking account
100%.
For your and try to it's called commingling, and accountants absolutely hate it. So if you want your accountant to be your partner, you want your accountant to be your pal. That's step number one. Go get an open business checking account. Period. Can I get an amen on that?
That's it. That's exactly it. I mean, the more that, well, and so just from a compliance standpoint, having all of that, we don't want to give the IRS any
ammo.
Any ammo, any reason to be
blood in the water.
we don't want to give them to look at our personal stuff any more than we have to. And if we have the business stuff going in a personal account, then it makes it hard to argue with them why they shouldn't be able to see your personal bank accounts. And so that's that part. And then from a liability, and I'm not an attorney, but what I understand is the more that we keep it separate, the more that the business acts like a business, especially if you have an LLC attached to it, the better off we're going to be from a legal standpoint to separate our personal assets from our business assets. So, we don't want to subject any personal stuff to business risk any more than we have to, and that would be another reason.
Okay, excellent. And if you wouldn't mind telling the truth to this thing that I've seen countless times, day in day out, doing business lending as well, is everything is in the business name. You could be your personal cars, be your house, everything they own is in the business name, and they allegedly paid nothing from, the personal side. Everything runs through the business. Can you maybe help people understand how that makes life a lot more difficult from an accounting side and also from a business lending side as well? Because this is not jiving. This is not working. So, and then when you go to try to sell that business, you're like, oh, but the business really doesn't the cost of goods is really here, but we put it in cost of goods, all of our personal groceries, because we run a restaurant and all this other stuff. And I've seen this like 10,000 times. I'm just like, oh my God, you're killing me. So, why don't we talk about that a little bit? How okay. Again, it goes back to the writing everything off, including your shoelaces. Yeah, it sounds great to put, all your stuff in your business and let your business pay for it, but at the same time, how it hurts you in the long run.
Yeah. So, from a compliance standpoint, we need to have any sort of expense that the business claims on a tax return, typically, to be an ordinary and necessary expense. It can't be your personal groceries. It's not an ordinary business expense. But, a meal out with a client would be considered a ordinary and necessary business expense. So that's an easy option, easy example. But so I think where I was going with that was if you want to take money out of the company, to pay for your groceries or to pay for your truck payment that you have on the car, whatever you want to use it for personally, that's fine. But you need to make it a separate step. So, with the assumption that we're dealing with something other than a C corp, have the company transfer the money to your account. Better would be to have the company write a check to you, you the owner.
Yep.
You take that check, you deposit it in your personal account, and then you use that money for whatever you feel like from your personal account. I say that, you can't take money out of you shouldn't take money out of the business if you don't have what's called basis, and that's a much more complicated discussion. But, assuming that you have basis in the money that you take out, then, that money that you take out has already been taxed or will be taxed.
On the personal side, yeah.
On your personal rate, it'll flow through to your personal return, and you'll pay tax, which means then you have basis in this money, so you can pull it out and use it to pay the tax, the extra tax from the business, to pay the groceries, whatever the personal budget is. I would just try as much as possible to make it a separate step. Get that money into a personal account and then use the personal funds the way that it's supposed to be. Again, just to keep the business and the personal stuff as separate as you possibly can.
Correct. Yeah, that's like I said, I've seen it where people want to sell a business and trying to unwind all that. It's like, well, especially, like I said, I've seen it a million times in restaurants. Like, yeah, we all of our home. So really, like I said, the cost of goods is not really that high in all
Right,
actuality.
right,
It's actually at this because my son, my daughter, all my whole family's personal groceries run through the restaurant. And
right.
I'm like, I can't unwind that, and neither can you.
Yeah,
You're gonna have to give me a really clean tax return next year because this year is shot. So,
yeah, exactly.
okay, so I mean, I think we covered a lot of really great information. Like I said, I definitely love having you on for being the expert in your field that you are. Is there anything maybe you want to throw out there? Maybe we didn't cover, or maybe something that is coming up. Like, hey, you know what? Guess what? We got a new president. So here's some fun facts that are going to be coming to smack you in the face here in a couple minutes. Anything along those lines? Maybe we didn't cover, or we maybe kind of like I said, we don't like to forecast, but at the same time, it's like, hey, you may want to prep for this.
Yeah, I mean, so nothing in concrete, that's for sure.
Mm-hmm.
There's talk right now about potentially tax increase. The theory will be, or the talking points will be, that it's the richer people that are going to pay the tax, which may be the case. But at the same time, it's easy to be in that quote unquote rich area. When
That
you have
bar
a
gets
business.
lower and lower all the time, doesn't it?
Well, that too, and if you have a business, your W-2 may be something, but then the business income may be 300 grand, and then you have a spouse that maybe brings a W-2 as well, and all of a sudden you're over 400,000 and you're part of the rich. So that's it's not difficult to get that high. Mm-hmm. Is my point on that. So that's one thing. The other way that we may potentially have some kind of tax increase for even households that are below 400 is if they get rid of what's called the QBI deduction, qualified business income deduction. And that deduction was, in my opinion, the greatest deduction that we got out of the 2018 tax bill. Mm-hmm. It was basically a 20% deduction on net income that just, you didn't have to pay for it. It just was. And there's been a lot of people that have saved a lot of money in tax on that. And that could easily go away. And that would be basically a 20% increase in your tax really, really quick. Well, actually, 20% increase in your income, mm-hmm. and then the tax rate on that. So I could see that happening. I think
elections have consequences. Yes,
for sure that, and that could, even if there is some kind of wave in November of this year, there's still going to be a lame duck that can pass stuff. So I still think that that's a distinct possibility. The other one that hasn't been talked about too much, but really what I think will happen is S corp earnings, net income on S corps, I think will eventually be subject to self-employment tax, at least to some degree, which will change the strategy on S corps and whether they make sense as much or not. But there's nothing hard and fast on any of that. That's just kind of gut type stuff. Yeah.
Okay, excellent. So maybe in closing, you want to give everybody like maybe your contact information and put the business name out there. So if they have any questions or anything, they can contact you.
Sure. So we're on LinkedIn at Cary Millar, CaryMillar. I think I think there's a Facebook page. Website is up. Yeah, I mean we're searchable. Yeah, we're searchable. Yeah, it's not too hard. Look up Adam Cary. I pop up, so it all works.
Excellent. All right. Well, I said I just definitely appreciate you taking the time. I'm definitely glad you survived another tax season. You're battle hardened and getting through the trenches on that one. So I appreciate you taking the time, brother, and helping helping my listeners out and everything like that. And then of course, if there's anything that we could do for you, of course, feel free to reach out to me and let me know.
I appreciate it much, Chris. Thanks for taking the time and reaching out.
Oh yeah, no problem, man. Thanks a lot. Have a great night.
All right. See you, brother.
Bye now.
Bye.
All right, that was Adam Cary. Like I said, know the guy for years. Guy's top shelf. He knows what he's doing, for sure. So it's been my account before, and like I said, definitely enlightened me on a whole lot of stuff. And hopefully, I said he enlightened you on a lot of stuff too. Again, taxes are complicated, and I don't care, who's president or whatever. None of that makes a damn bit of difference. Like I say, because the IRS just sucks all the way around. So, but we got to do what we got to do to, we got to appease the man here. We got to, they said, especially if we want to borrow. So again, it comes down to, we got to have that debt service, and it's got to be on black and white tax returns. I don't care, P&Ls can look great. P&L is a profit and loss statement that's internally prepared. Okay, that can look great, but what you file in the actual tax returns can be 100% different than what looks at a P&L. So that's just another, banking, accounting thing. But like I said, the message is, yes, you have to have a CPA if you want to run a business, but you also have to have a business banker and an attorney and financial advisor, and definitely an insurance agent. We got those coming on board for interviews as well. We're going to cover all those different strategies and all those different aspects of the business. Running a business is not easy, and it's not for not for the weak of some. Then again, but we're veterans, so there ain't nothing that they can't throw at us. We're motivated, so these are just the tools that we have in the arsenal. These are just the weapons that we employ to get the mission accomplished. So take that for what it is, like I said. And if you have any questions at all, you can always feel free to reach out to us at info@timemoneymanagement.com. Or like I said, just listen to the podcast, follow us, and please comment, ask questions. Hey, call me, or hey, like I said, if you think we should cover something else on the show, always free to open suggestions. I was told not to cover sports anymore, but I'm probably going to do it anyway because the Suns are kicking ass. Giants had a pretty decent draft. And it's my show. So if I want to cover sports, I'll cover sports. But like I said, no offense to anybody. But again, we do a lot of business stuff, but at the same time, got to have some fun with it too. So if you have any questions, comments, concerns, complaints, let me have it, because that's the only way I'm going to get better. There's only we're going to have better shows and keep you guys engaged. So feel free to give me a shout. And as always, stay tuned, stay focused, stay motivated.